Evening, getting ready to have wrapped up the trading week. So just wanted to look at this EURCAD trade that I took today. I don't know if it was the only trade I took. I don't actually keep track of that. Did take this trade though, track it in Telegram. So deciding when I was going to take a sell, I was going to say if to push a little deeper, I'd be adding a little bit more. It did go deeper. I happened to miss it though, because I was too busy talking to one of my kids about stuff, and I ended up closing it out. It ended up being a small winner. Actually, I don't even need to pull that up there. We can go back here. It's on the trading journal that I keep track of. So a little $20 winner. Once again, I was just starting that position. I was looking to add if it pulled a little bit deeper. So basically wanted to go give you the rundown of this. So that way, I mean, it's not rocket science. You can do this yourself. And so I had a question from somebody in the Discord channel. They're like, hey, I have a journal I want to look over. I want to see if you can help me out in regards to optimize and everything like that. And so that's what I'm looking to do today. But the questions that they asked that make it really, really easy to answer is because I can answer these really, really easy right off the bat, because this is how I trade. So let's start with that. Let's start off on, I'll be answering, oh, I'm going to slaughter his name. I'm going to answer A with this simple question here. So he's asked, do you mark support and resistance off the 4-hour, 1-hour time frame? And when it comes down to it, myself, I do 4-hour. It doesn't really matter though. The idea being whatever time frame that you're going to be trading from, you need to be on that time frame, mark up your zones, and then when price gets into those zones, both in the past and in the future or present, you look to see what price is doing in those zones. Whether it is on that time frame, the 4-hour time frame, you can see how price is moving into a zone. Sometimes price will come up strong into a zone, and then it'll just flutter there. The ticks will just go up and down a little bit, and so you can watch that, and that's something you can learn. You can also drop down to a lower time frame. What that lower time frame is really all depends on you. Depends on you, your time schedule, your personality. This is why there's really no one shoe fits all sort of thing. You have to find out what works for you. And so for me, I do the 4-hour. The 4-hour gives me a whole lot of opportunities to be able to monitor all these particular trades or all these particular pairs that are going on without having to be bombarded with alert after alert. If you go down to a lower time frame and you trade the 1-hour time frame, 30-minute time frame, things of that nature, and you do roughly the same thing that I am in regards to support and resistance and breaks and retests, you might end up getting so many alerts all throughout the day that you don't actually get the time to sit and look at the trade and go, do I want to take this trade or not? By the time you get an alert and you go to look at that trade, you have an alert for another trade. And so instead of thinking clearly through whatever is in front of you, your mind is already racing to what was that alert? What was that? What do I need to go look at next? And so if you're going to trade the lower time frames, you probably need to shorten down your list. I would say if you want to start someplace, start with 3. Give yourself 3 good pairs, starting with like Euro USD, GBP JPY, and AUDCAD or NZD CAD. Something like that would give you just 3 pairs to focus on. And then if you find yourself in lulls all throughout the day, in lulls in your trading time frame, depending on what you're doing, then add another pair. And keep doing that until you get to a steady state where you're like, okay, I feel comfortable. Then just stick with that and continue to work at that. So the next question that A had was, do you follow the trend in regards to like biased based trending? The short answer is not really. The long answer is yeah, sort of. It all depends. So given whatever I'm seeing here, this original zone that I had marked up was just a break and retest. Price started down here, came up, pulled back, broke through. And so this was an original zone to look for a break and retest. It was just nice and clear. If you zoom it back over to where this was, like this was just a nice area that was respected before, broke above, and could be a possible area for a break and retest. It's not a really strong support and resistance level. When you look in the grand scheme of things and you zoom out, like that level is not relevant. And so will I take trades like that? Yes. Are my rules still the same? Rules is my logic behind taking the trade, behind managing the trade, still the same as support and resistance? Yes. So I do take into consideration small trend-based trades, breaks and retests in my trading plan. Do I take trend-based trades just because it's in a trend? No. So if price were moving, like price was up in an uptrend during this area right here and had a nice pullback, I really don't have a level to work with here. I wouldn't have looked at this and gone, okay, cool, I expect price to go up higher. Why? Because we've been in an uptrend here. It's had a nice pullback, hasn't pulled all the way back, but now we're stalling, and I'm going to go ahead and get in and go. I have not gotten to that point in my trading journey where I feel comfortable enough to place trades like that. So I don't. Support and resistance, breaks and retests. If I don't have a clear zone of support or resistance, then I won't take a trade. You could find out if you get into this and you start tracking your own trades and you realize you are good at trend-based trading, then by all means, continue. This is just not something that I'm comfortable with. The third and final question is regards to how do you confirm rejection in your zone? Typically, what time frame do you follow? What do you look at and things of that nature? So depending on the time frames that I am on, I will jump down. I used to have it was a sort of flexible rule in regards to, let me figure out how many candles that would be. Anywhere between, I'm drawing a blank, anywhere between, if it was on the daily, I jumped down to the 30-minute. If it was on the 4 hour, I jumped down to the 5, although sometimes I use 15. So there was a certain amount of candles I wanted to be able to see within that window of time, within that 4 hour time frame. And so that is roughly my ratio that I use. Is I want to say it's about 16 candles. I want to be able to see about 16 candles in between the different time frames. And so, the 5-minute time frame on the 4 hour actually has a whole lot more than 16 candles. Yeah, so I got nothing. But those are the areas that I'll look for. As far as rejection, the first rejection comes off the 4 hour to begin with. So whenever I'm looking in a particular zone, I will draw my zone, and I'll usually start from the wicks of a level to the bodies of the previous level and try to encapsulate everything that makes sense in regards to that zone. Like this was a break and retest based upon just this information right here. Not trying to incorporate all this back here because then it wouldn't really make sense. This was only based upon this. Now, given that, I only used what made sense here at this point in time. So once that happened, price came in here. I never actually got an entry. Once again, my original rejection is going to come off the 4 hour. I'm going to look at this and I'm going to wait to see how this 4 hour candle basically closes in and around this area. This, it left this area. It rejected it. Sure, great. Didn't give me an opportunity to come in. Once price comes back down here, leaves this area for a little while, and I get to see price come on back, this is roughly an area. Still the same thing. I'm going to leave it there, and then I'm going to see what happens when price gets here. Now, once price gets here, I'm going to see how the candle closes, and we close with a rejection. Now, that zone, I can shore this zone up, but really it doesn't matter. The idea being, this is roughly the area that I want. And so for me, if price is going to do what I expect it to, which is to bounce off this area, I don't really expect price to go much higher than the previous rejection wick that it gave me. And so I'm only going to have a stop, comfortable enough distance. Whenever I don't know 100% where my stop's going to be, I'll start out using the ATR. So I'll use this. This is set at 36 pips, and this is set at 40. So somewhere in here, when this first started and came up, I had a 36 pip stop loss, somewhere in there roughly. And that was it, my 1-to-1. In the process of, placing the trade, putting in all the details and everything like that, going to position tool calculator, putting in finding out my lot size here. Price could have slipped a little bit, but I want to keep my stop loss roughly in about the same area that I started. And so that's why it is what it is. So started like 36, ended up being 40, might have rounded up. Either way, what that generally does, what using the ATR indicator for me generally does, is it gives me something that I can look at in regards to, does it look right? Without being, too much or too little. That was always a problem that I had with before, is I would choke out my trade by having my stop loss too close. And so by using the ATR indicator, it has helped me to separate that and give me a place to at least start with. And then I'll look and see if it makes sense. If for some reason I'm trying to think of an actual, like, if I start off with this and all of a sudden I look at that and it's like, you know what, it actually needs to be a little bit bigger. That would really all depends on what is going on this area over here. Maybe, yeah, I got nothing. I got nothing. It really all depends on what is happening, but that's where I'll start. So, and I've noticed that it works out really well. So once I come down here, then it's the same thing that you should have pretty much seen if anybody's watched my channel in regards to how I trade. It's roughly about the same thing. I'm looking at the close of that candle, dropping down to the 5-minute, and I'm looking for the way price is reacting after this, because I'm waiting for the wick rejection. I'm waiting for the wick to be created and then to roll over. And so that's what happened here. That's what happened here. In this time here, we had price had opened up, came down a little bit, came back up, gave a nice little, this is a small engulfing candle, but either way, I'd had the small engulfing, it's followed by a lower low, lower close. I'm like, okay, cool. I want to get in this trade. And so I got into the trade. Went for a small 1-to-1, ended up closing a little bit early, just because somewhere around here, it started to like do a wick pullback. I'm like, it's so close. I'm just gonna go ahead and close it. So that's how I get into the charts. That's how I get into my trades, is support and resistance. I have been playing with trend lines. It has worked out well for one trade. And then I'm also playing with some sort of other management style. One of the other management styles that I'm currently playing with is the closing a trade early, which has bit me. I was in this CHF JPY trade. I had called it out here. CHF JPY buy. Closing CHF JPY is just not going. And so the reason that I had it, I originally had my trade in there, and if price is going to respect this zone, it's going to respect the zone. So one of the things that I'm actually looking at incorporating into, like, okay, if it's not going to respect this zone, when is a good time that I can look on a lower time frame that generally will give me indication it's not going to respect this zone. So down on the 15-minute is where I've been looking at particular things. And I usually I'll set an alert at my zone, and then I'll set the alert to be on the candle close. So on the 15-minute, if we get a 15-minute candle close that closes down below here, I'll generally exit the trade. That keeps me out of trades that no longer respect this zone and then fall and turn around and will stop you out anyway. And so it has been working out pretty well. This would be one instance where it looks like it might have, it might not work out for me. Like if I would have still been in this trade, I still would have won, or still could possibly win. Don't know. It's Friday. It's after 5, so the market's closed. We'll see what happens when the market opens on Sunday, and I will basically just track this trade. I have it in my trading journal. I have the exit completely blank. That way I can come back, I can look at it, and I can assess and look at, okay, what did the 4-hour look like? What did the 5-minute look like? This is the 15-minute. It should have been the 5-minute. And then I can review my journal. So with that being said, sorry for the long rant, A, because now I'm going to get to your journal. So A had asked me, he's like, hey, here's my review journal. If you could take a look at it. I think I just closed out my own trading journal. I want to keep that going. That's not mine, is it? Where is it? I don't know. Okay, we'll open up later. There it is. All right. So he's like, can you look at my trading journal? He's like, I've blown a couple accounts or something like that. And, for the most part, a lot of us have done that. So no biggie there. It happens. It's the price you pay for the education that you're getting. One of the things, right off the rip, I want to look at is I was paying attention to your profit and loss. And when I look at your profit and loss, this is a blown account. It looks like you had a loss of $100, $112. So with that being said, to me, risking $22 per trade, if this is accurate, way too much. Especially if you're asking for somebody to review your trading journal to say, hey, where am I going wrong, sort of thing. Like I want help. If you have been consistently compounding trade accounts like this before, and I know you watch Nick Sean, and he has this whole compounding course that he goes through, and he shares stuff on YouTube and all about it, and you have to get in the habit of doing it. And once you do get in the habit of doing it, you get over the fact that you're going to blow accounts. Because it's such high risk, you're going to blow accounts. But the idea being that you've practiced it enough that for every 5 accounts that you open, 2 of them you may blow, but 3 of them you'll make to your growth target of 10x or more, whatever you're trying to go for, usually about 10x. And so you end up making far more than the blown accounts. That takes practice, though. That takes a lot of practice that I don't think you have yet. And so, because right here, in regards to what I'm seeing here, is I have like 23 trades here that give me a little bit indication that you're still practicing this out. And so if you're practicing this out, starting out in a compounding high risk situation, not the way to go. So let's take I have looked at a few of these, and a few of these are like really nice. It's like the breaks and retests, the support and resistance that you have drawn. It's like, yeah, those make complete and total sense. The entry reason that you're getting in, the risk management, I'm a little unsure of, based upon some of the stuff that you have going on, but we'll hopefully you and I will be able to talk more in Discord over this, and we'll be able to finalize something that is a little bit more structured. Maybe possibly structured is the word I'll use. So let's take a look at some of these. So we got an odd USD trade. Looks like a break and retest. The only thing I would say in regards to that, that looks nice here. Like, I like this zone. This zone looks great. The break area here, is that the right? Oh, that's after the trade. Okay, cool. So this would be the thing, though. This is a really small break. And for me, it's like, if this is my zone, probably want to be somewhere in the middle of that zone. Good entry, though, for whatever your entry reason was, doesn't really matter. The idea being, though, you probably wanted to have managed the trade somewhere around the lows of this break. And so, I don't want to say hindsight, but like, that's roughly would have been, if my target wouldn't have been there, I probably would have looked at that. I don't know what odd USD, if this was in a downtrend. It looks like it was. So it's possible you could have been going for a lower low. I think at that point in time, if you actually look at the way the market is structuring, though, the lower low is probably not going to come directly after this. That you're going to get a pull deeper in before you start getting before you start getting that next push. And so going for that original 1-to-1 here and having a stop loss a little bit closer, even if it was less than a 1-to-1, knowing that you're going to manage it somewhere around here on the 1 hour time frame would have been perfect. So that way, after you saw this small rejection, you could have either, well, you went to break even. So that was smooth. If that's what your trading plan is got you doing, is doing break even. So I'll leave that alone. The zone looks good though. Then we have, this one was a little confusing only because it looked a little messy. So now you're on the 1 hour from the 4 hour. Here is where it's like, if this is the zone, which is the same zone as the one before, it's the same one. The first one entry was somewhere over here, and this is the second entry. Second entry, waiting for that middle of that zone would have been perfect, because then if you had your stop loss in that same area as you had this one, come here. Oh, how's that before? Okay, that's fine. 5374. 5374 would have been somewhere up here, middle of the zone. You still would have been in, and you would have hit your 1-to-1 easily. The only thing that I would say is just all this price action that's over here. Like, if you were expecting price to move out of here that first time, that's for whatever reason you were expecting price to just plummet from there, and it didn't, and you ended up getting this almost equal bottom wick here, and then it comes back up, and you get this green candle here, which is very leery because you already have a strong wick to the bottom as it comes up. It's like, this probably would have been my entry would have been there. I wouldn't have gotten the first one. And then I would have went for the 1-to-1 and should have been all hunky-dory. You got to break even on that one. Broke support, came for a retest. Notes are great. Trade sell, MFX. So yeah, the zone looked good though. Absolutely looked good. GBP CAD. GBP CAD is a different one. And let me see, because you might also have to look at, it looks like you have, there's a lot of MFX trades here. And I don't know if you're in the free Telegram for that, or if you're actually in the close friends group. But with that being said, I enjoyed the close friends group while I was in it. I'm not in it anymore. I believe it definitely has its place in regards to learning. But if you're in the close friends group now and you're trying to place these trades, I would say don't. I've been with Nick for quite some time, and he has, his trading style right now is, I mean, he's phenomenal at what he does, but it's a lot of intuitive entries now. And, I'm still in the course. I still go to the live sessions. I still follow the Telegram. But I don't look a lot at what Nick is doing because it no longer aligns with how I trade. And so that's what you really got to watch out for, that, because if you're trying to figure out how you're trading, and from a lot of what it looks like, at least from the beginning parts, well, I say that, but now I need to go through and actually look at the ones that aren't marked off as MFX trade to see how you would have set things up. The original ones before, like, that's how I learned how to trade. That's how Nick was trading probably less than a year ago in regards to support and resistance. Now he's doing that trend trading. He's doing intuitive and context. Like, there's a whole lot of experience and intuition in Nick's trading that I don't possess, and there's a lot of us who are learning don't possess. And so unless you are digging yourself deep into the markets to build that for yourself, I would say don't try to use that as your foundation now. That's something you can build upon once you already have a foundation. So let's look at this one here. EURCAD. Let me see where your entry actually is. So I know, okay, so one thing that I know I've been struggling with, although I'm better at doing it because I don't always just use my trading journal to help me figure out what was going on. Seeing particular the entry criteria, the entry reason on the chart is helpful, I believe, especially if you start having a whole lot more trades in 23. When you look back at this, it's like, can you look back at this and know exactly why you're going to take this trade? Like, if you have to think about it and it's not as obvious, then you need it in notes. You need it in your notes. That way you can look back and go, what was my mindset around this trade? I'm not 100% sure. You have a fib retracement here. Looks like 50, 61, 8, those golden ratio zones. And then you have this here, which I'm not 100% sure what that's about. And then the end result is stop loss. Upward momentum entry. Do you have any notes on that one? Price reversed, error entry. Yeah, so yeah, I got nothing on that one. Yeah, so let me clear off that one. Let's go to this next one. Here's another EURCAD, upward momentum, break even. You're using the fibs again, so you got to be careful trading it up. And looking at the trades, the question that I would have is, are you trading it? Are you changing your trading style because of the 3 break evens and the 2 stop losses? Are you changing your trading style based upon that? And if you are, you got to realize that's a non-win situation. You're not gonna be able to get very far going about it that route. Stick to what you know is working. And so if this is working, then stick to that. Figure out if it's working and then stick to that. If you've got to trade one way for a month, and month, 2 months, I generally say about 100 trades. You want about 100 trades to look at something and go, okay, what is my chance of success doing this? And so if you take 100 trades, and I understand putting in all that time and effort, either back testing or forward testing is very discouraging, only to come out at the end and go, you know what? It doesn't work. But I think the key there being it probably does work. That just might not be the way you want to trade. And so you need to find something else. You need to find a different way, until you find your niche on how you want to trade. Because as you've probably seen it, there are so many different ways you see people trade and they're successful at it. There's really almost no wrong way to do it. The only wrong way to do it is to not be profitable, but there's plenty of ways to be profitable. And so you got to find your way that feels comfortable to you. So start with something, keep it simple. If it's support and resistance and breaks and retests, start there. If you're going to do Fibonacci retracements, on trending markets, start there and just stick with that, and then come back and look at your trading journal to see if it actually works out. Let your stats, let your data all play out to make your decision on whether or not it's working for you. So let's go to this guy here. One of the other things, as we continue moving forward, you start out with $22, you started losing some, you somehow got back up to 20, even though you haven't won anything. So in here, the risks is not right, drops down to 10, 18, and then you come all the way up to 27, back to 25, 27. That's 100. And so it's like you're risking way too much to make a unemotional decision in trading. So got to be careful with that. So start with something small. We suck at wanting to be happy with the $1, the $4, the $5 wins, even though majority of the time people have shown us that we can take accounts and we can grow them and compound them, and we can make a lot of money from this process. Well, it's that process we want to skip. We just want to get to the making a whole lot of money part, but you got to make it through that process first. And so let's lower the risk a little bit so we can make it through this process. If you've blown 2 or 3 accounts in the same fashion, then you're probably going to be too discouraged to continue moving forward in any effective process, effective way to be profitable. And so you got to stay in it long enough to find that little edge, and then you just tweak that edge until you get better. So let's do this. So now it looks like a trend line trade. USD JPY, reject from major resistance. Oh, is this? Okay. Did I pull up the wrong thing? Let's close out all these and start over again. Reject from major resistance. USD JPY. USD JPY. Okay, we got the reject. That's the after. Your before. I would really switch those around just because it flows before, after. Euro JPY. Okay, so that's not the right screenshot for that. But if we look at the after anyway, you had a reject from a major level. I'm assuming this is a major level on USD JPY. You had a rejection from there. I'm not sure because you have the fib on there, and it looks like your levels that you're looking for is a pullback into the 50 and the 618, but I don't exactly see a pullback. And so are you getting in too early? FOMO are some of these FOMO trades. You need to be able to come back and go, that was a FOMO trade. Can we manually close price reversed? So you made 21 on that one. So at this point in time, you're down -5. So you're at 90 something dollars. Yeah, so you're down 90 something dollars, and yet this is a stop loss on 18, and then you jump up to 25, which means you already lost 18 to begin with off 95, and now you're down to 80. So it's like keeping up with this, or keeping track of this, and looking at what you're doing in regards to your wins and loss. You are risking too much, and you need to find some consistency in that. Some consistency that'll save your accounts. So let's go look at this guy here. See, this is more in line with what I like. Bounce from major support. That's Yeah, that's okay. So that's not helpful. Oh, wait, you got it there. Okay. Oh, I gotcha. So we've already talked about what I look for before, and you've seen some. Oh, this is the hour. What is the four? Do you actually give me a 4 hour look? You don't give me a 4 hour look. So this is the hour. It looks like you're actually trading off the hour at that point in time. So if you're trading off the hour, then it's the same thing here. Once price comes into this level and gives you this one wick rejection right there, that is my clue of me for like what is my confirmed wick rejection or what is my confirmed rejection in the zone. That right there for me. Then I go down, I mark the close of that candle to the next open because I want to see what's happening below that close, because if price is stalling down there and seems to be turning around, that's the wick creation for me, because that's generally how candles form. If you go look at particular candles all throughout your chart and you mark the actual candle, previous candle and the new candle, you'll see that most of the time when a candle closes and it opens, like for a bullish candle, it'll come down, create the wick, and then go in its intended direction if it's going to go that way. If it's going to be, flip that for bearish, but if it's going to be a rejection, same thing, it'll close, it'll come up, and then it'll turn back around and break that open area and flip its color. So for me, that's what I'm looking for. I'm looking for first signs of this bearish momentum slowing down, and then it looking like the bulls are stepping in. And so I'm looking for that down there on the lower time frame. So for like 1 hour, I'd hop down to the 1 minute. Yeah, 60 candles. Is that really? Yeah, I guess that is right. That is right. Okay. So I'd hop down to the 1 minute and look down there and see what's going on. The problem with getting down to these lower time frames on small accounts is spread. Spread generally will chew you up in the lower time frames because it just sucks. It just sucks for us. And so you got to be careful with that. Be careful going down the lower time frames just for that. But with that being said, even if after price had done everything that was doing, you got your wick rejection, and even if you took just a 50% entry, I got my wick rejection, I'm just going to take it immediately. Your stop loss is where it's at, and your 1-to-1 is where it's at. This would have been a beautiful trade, and granted, it's hindsight, but if you look back through my trading journal, you'll see that these are generally the trades that I take majority of the time. Have I taken trades where it's been away from the zone? Yes. Do I regret them? Absolutely. You're too far away from the zone. The price is already pushed. So we just want this one little bounce. We just want this one little hiccup in that momentum. We don't care if it's going to turn around and turn into a downtrend from here or not. We just wanted that original pullback, the pullback of this downtrend. If it continues going, great, sure, who cares? As long as we're already out. So yeah, let me get out of the, how do we get out of that? Stop with annotate. So yeah, this was a good setup. I would be careful around the 1 hour. You can end up getting conflicting stuff if you're going to go from the 4 hour to the 1 hour and things of that nature. Stick with one time frame and go with it. Usually that time frame is going to be dictated by your current living situation. If you have a 9 to 5, then the daily and the 4 hour. If you know you're going to be able to sit for 3 hours at a computer, well, then you can do the hour, 30 minutes, and you can look at stuff like that. But it really is based upon your time. You can, if you decide, okay, hey, I want to be a 1 hour trader, but you work 12 hours a day, that's probably not going to work out for you. You got to eat, you got to sleep, you got to spend time with family, you got to have hobbies, you got to have downtime away from the charts. Or else you will find reasons, you will make up reasons to get into a trade. And so be careful of that. So let's get rid of those guys again. So I like that one. That one was good. I like that one. Let's look at this guy here. We have a USD JPY. Okay, cool. So there's the 4 hour. You're in a pretty big zone here. To me, this probably would have looked like a daily zone. But you know, it is what it is. Looks like you hit TP on that one. Good job. This one says stop loss though. 23 bucks. 19. Were you trailing your stop? Is that what you were doing? Maybe. I don't know. Trailing stop, you need to, so like that needs to be on here as well. Like if that's what you're doing, you need to put it in your notes someplace. That way you look at this and you go, oh yeah, that was a stop loss. But then you have to figure out, you have to look elsewhere and go, no, that was actually profitable. Why was it profitable? According to the stop loss thing, that doesn't make sense. So and you risked 19, so you made 23. So it went a little further than what you for a 1-to-1, which it looks like, yeah, you were going for further than the 1-to-1 anyway. So what were your reasons for taking this trade? Once again, you have the fib on here. I'm not exactly sure why. If it has any relevance to your trading decision, I don't see it. I don't see where it has any effect on your trading decision. So it looked like you had just what looked like a small trend change on the lower time frame, which is like, okay, yeah, if this is going to be the trend change, then let's go for it. Yep. So yeah, that's good. If this is what you're going to do, keep taking note of what that looks like. What does this trend change look like to your eyes whenever you hop down to the lower time frame on the 1 hour time frame, from the 4 to the 1 hour? What does that look like? Because if you can train your eyes to continuously look at this, that's when it's going to kick in and you're going to be like, yep, I've seen this happen over and over and over again in the zones that I draw. And 8, 7, 6 out of 10 times, it goes exactly where I want. 6 out of 10 times with a 1 to 1.2, 1 to 0.25, you know, is way more than profitable. So keep that up. Find out what that was and do it again. Let's look at this guy. Price reversal on USD JPY. Okay. See, and so now you're jumping from the 1 hour to the 15-minute. Not exactly sure what that's about. Also not exactly sure what this, like, I understand you said price reversal or price reverse, but like, I don't know. There's really no context on where this price reverse is at. Price reverses all the time. Doesn't mean it's a good indication that you should get in. I mean, technically price reversed right here. You had a downtrend. This, whether it was this low or that high, you're going to call whichever it was. Price broke out of that, broke out of this downtrend. That was a price reversal. Could have got in and you wouldn't have gotten anywhere, depending where you put your stop loss. So it's like, now it looks like we have 3 different trading approaches that we got to be careful with. So let's find one and stick with one. This is a personal trade. CAD JPY. That is the same. That is the same screenshot. Okay. So this next one's actually the same screenshot as well. Yep. So personal trade, I can sort of see, you know, you have some support that's here. It was broken, tested as resistance, came back, tested as support. But in the grand scheme of things, support came here. Support came here. Support didn't go higher. Resistance, there. Resistance, not really. Came back up. We are expecting this support to give you all that when it has never in the past done that. Oh, look at those smileys. He's not even happy. Look at him. He's crying. Okay. Yeah, so it's like we're expecting something out of the market that it hasn't shown us it's done before. Why would we expect this support to all of a sudden be this huge explosive trampoline? I wouldn't, not based upon past experience. And so let's be careful getting down to the nitty gritty of the support and resistance zones that we happen to see. And yeah, gotcha on that one. So close steps to the right. That was CAD JPY. Euro USD entered once. Once enters sudden affected by news. Oh, I don't know what the news event was. Oh, yeah, I don't know what the news event was. August 23rd. August 23rd is Wednesday. Okay, so not like NFP or anything like that. Yeah, I got nothing. I generally, unless it's like NFP, I generally don't look at news. I do have like that whole mindset that Nick has in regards to it. Like news is just going to make it move where it's supposed to go faster. So it's all right. OddCAD. Same, okay, same screenshot. Okay, so let's look at this guy. We have a resistance here on the 1 hour, or a technically support here on the 1 hour. Wasn't fully respected back here. Price came down, came back up, started doing this sideways moving stuff before coming back up. This is probably where my first, I probably would, it gets kind of messy. It gets messy when you start getting here. You're using this, which is 100% clean. Great. That would have been great if price had just broken through here, come back up and retested. Cool. Price didn't do that. Price eventually came back over here and started doing this zigzag stuff through that. That's not respecting the zone anymore. And so it's okay, cool. I won't use that zone in it. Let's go ahead and nix that zone and say, okay, cool. What do we have? Well, if we just take just a bird's eye view, we have a bounce here. We have a bunch of bounces here. And then we have a final bounce here before a breakthrough. Okay, cool. Nix this zone because it's not being respected. Now we have a zone here. Let's do this. Come here. Now we have a zone. I'm going to encapsulate all those. I'm just going to use, let's start there. Now we have a zone here. Prices respected it, bounced up, respect, and then finally broke through. Well, when price comes back into this zone, do I get a does it respect this zone? Well, right off the start, if I can draw it, can't really draw it. We do have a wick rejection right there. Once you get the wick rejection, based upon how I trade, don't know if you trade this way, but this is how I would trade it. Open candle, wait to see what price is doing in and around this area here, do about 50% of the wick as well as the high as the wick. This zone is only relevant to the point it made me look at this area when price got back there to see how price was going to respond. I'm going to use price to tell me where my area or where my invalidation, where my stop loss should go. So now, given, let's say that stop loss entries there, 1-to-1 is probably right about there. This is OddCAD. I am dying. Need to drink something. Let me pause for a second. All right, back. Sorry about that. So let's go look at OddCAD. This was OddCAD on what day? The 24th. OddCAD on the 24th on the 1 hour time frame. What are we looking at? Right, 1 hour OddCAD. Wigwag. 23rd. Let's look at 8708. Let me get the drawing tool. August 23rd. Uh, 8708. Right? Is that about right? You get my numbers wrong. Stop loss was 73.65. And take profit was someplace. Got to move myself. 66.55. 1 to 1.5. Okay, cool. There's the area. Now we're back someplace. So looking at this area here, and encompass all that wick area right, or all that area right there. Let's go back to the replay tool. I'm on the 1 hour. This is where once price already whipped through this area, I would have already had this set up. It's like, okay, here's my expectation. I would have had a little arrow drawn. It's like, this is what I expect price to happen. I might have put the position tool on there, I might not have. So at this point in time, ATR, top left-hand corner, right up here, and you do it with the arrow, not with actually my finger, it wouldn't work anyway. 16 pips. So I am at 16 pips. That puts me about right there. Now, I know that that's now based upon this, that's where price is given me. I want about 50% of that for my zone. So let's draw that. We'll move this over 1. And then also the open and the high. So those are the three the three areas I'm looking at. The flip of the candle, 50% of that wick. Why 50%, Robert? Well, simple, because sometimes when you look at this, although that was a really small one, when you look at these things, the candle previous wick, the next wick sometimes goes 50% of the previous wick. Happens a lot. Can't seem to find any right here, but it does. Sometimes you just get a full wick. Who cares? Where am I going with this? Why can't I find one? There's the high of a wick. There's a little bit over 50% of the wick. Here's another little bit over 50% of the wick. So that's basically what it is. Why 50%? Because 50% is a good number. I like it. It's halfway. It doesn't really matter. I just draw it here. But when I get down to the 1 minute, this is where I start actually making see if it makes sense. So once I get down here, it's like, does it make sense? Well, this 50% sort of does not make sense. It was not respected. Well, maybe it does. It was respected here and sort of here. And then I also have a little level here, which I got to be careful of. So not necessarily careful of, I just want to keep track of it because I want to see how prices can respond there. If I can get some lovely wick rejections like we've gotten there, that's a perfect area. And then we have the high here as well. How does price respond to this? Now, with all this in mind, I know price could come all the way up here, make its way up here, close right there on the 1 minute, and the next candle break back in. Cool, I'm game with that. Because even though it went higher than this wick, it looks like it's still not going above this level. I'm just going to read all into this as it goes. That's fine. So this is basically what I'm looking for. I'd be looking for price to pull back just a little bit, come up and test this area, or test this area, or test this area, and look to see if I get anything. Once price tests these area, if I don't get an entry based upon that, whether it's an engulfing candle, some wick rejections, I'm like, hey, I feel comfortable with this. I would come down and I'd wait to see if it's going to break this area and break this area. And then if I can't get on any one of those, then possibly the candle flip. Because at this point in time, that wick has been created. and then I could just have the candle flip. And then my stop loss, 16 pips, right, can be right from there. Why? Because if this is the wick that is going to be that 4-hour wick that is not going to change, price should just fall from here. My stop loss is just there to protect me in case I walk away and price decides to reverse. Does it happen? Yes, it does. So that's what I'm looking at. Get in here, play it out, see what happens. Here we go. Line by line. Okay, price does it just wicks right in there. Cool. Actually, that might be good. We'll see. Nope. Let's come up. Ooh. Great. Wick rejection. I want to take it. I'm going to take that one. Now, do I still have my 16 pips? Yep. And I want 16. This is 1-to-1. Just 1-to-1 for me. Oh, good gracious. That's really small. All right. Let's see. Play that out. All right. Drawdown. Okay, we get that next level. It's been tested. So let's clean that up a little bit. My first level was tested, and I got in on it. Second level was tested, rejected. Could have been another entry if you were trying to stack your trades or anything like that. I try not to stack trades and drawdown. I will stack trades as they go in profit, but I won't stack trades and drawdown. So we're in profit now, but I really don't have anything that would give me any sort of confirmation that I should get in. So we'll see. Let's see where it goes. Price pulls back. Oh, we're back in this area again. Cool. Now it falls. And we're just, oh, is that it? We're just going to let it go. And we continue down. How far down? I don't know. All the way down there. But I'm already out. That's my 1-to-1. What's that look like on the 4-hour? On the 4-hour? Oh, no, we're on the 1-hour. What's that look like on the 1-hour? It's that. That's that first wick. That's that first test. Right there. Because after that first test, I'm not trusting the second one. If you look at it, that first test did great. Came all the way down here. But if you look at it in the, in the scheme of everything that's going on, you have a low here, a higher low, roughly an equal low, and now you've just made, well, we can't nix that one yet. But now, based upon that one, you've now had consecutive higher lows all the way back up into the zone. This doesn't look good. Not for a second test anyway. Doesn't look good whatsoever. So, oh, did I not clear? Okay, yeah. And then turn off annotation. So yeah, that would have been that. Gave you a little rundown on that one. You got to see the entire process. That is roughly what I do whenever I decide to get into trades. I look, see what price is doing on lower time frames based upon, the higher time frame that I'm looking at, the zone that I'm looking at, and then just use price action to dictate where my stop loss should go and how I should manage the trade after that. So that was that for that OddCAD trade. What else do we have there? Price reversal. Is that the one we just looked at? Yep, that's the OddCAD trade. And then all the rest of these are MFX trades. So, in the grand scheme of things, you need more trades for yourself. MFX trades are great they're great if you're in the close friends group. Not saying you need the close friends group. I'm just saying they're great if you're in the close friends group. Why? Because you get the opportunity to talk with Nick and get his reasoning and rationale behind why he's taking them. The Telegram channel, if you're taking trades based on the Telegram channel, number one, you're taking them sort of in lag. He generally does post them relatively quickly, but you're still taking them generally in lag, especially if he's already posted it and it's already in profit. You're definitely in lag. Now, if he's posted it and you're in drawdown, okay, that's a little bit different, in which case you could do could do well with doing that. The thing that you're missing out on is the rationale and the logic behind why he took the trade. And so you're not actually, you're supposed to be utilizing that as a tool to try to understand why he took that trade before you place that trade. And if you're not doing that, then you're doing yourself a disservice. So I would say for you, if you're in the close friends group, then you still need to be doing your own trades. And you can definitely need to be talking and asking questions around what is the logic behind what he's doing and what he's doing. But also understand a lot of what he's doing right now is very intuitive based. It's based on his own experience, his 7.5 years of experience that I don't have. And I think I've been with him for like 4 of those years. So it's like, I don't have that experience. And so I would encourage you to focus on your own trading style. What does that look like for you? I don't know, because I've seen 3 different ways that you have placed trades. And so you need to pick one of them and go with it. Hit me up in Discord and let us talk over this a little bit more. So maybe we can flesh out some sort of idea of what that's going to look like. I have, I love looking over this stuff, and I would love to see success out of this. So, give me a ring. For anybody else who sat through all that and got any value out of that, if you did get any value out of that, then, just hit the little like button. If you want to be part of the Discord to have conversations just like this, which I hope to continuously have with as we continue to move forward, then can come join Discord and let's have conversation. If you have a journal like this and you want somebody to look over it and give you some feedback on and ask you questions, because if I'm asking questions and you can't answer what your answer is, or if I ask you questions and you immediately don't know the answer, then chances are you don't know your trade as well as you know your trade, as well as you should know your trade. And so all of the things that we do as far as trading, tracking our trades in a journal are all so that we can better ourselves. We can find out and look at these things and go, okay, what part of my trading is working and how can I make that better? How can I optimize that to either get out of bad trades early, or how can I optimize that in a way where I can take more off the table when I win than when I lose and just forget about it? There's many different ways to manage it. Some people do really well at set and forget. They have a 1 to 1.5 set and forget. They don't even do anything else. They don't try to manage their trades. They don't try to track them. They just set it and forget it. Other people have to work with managing their trades. They're not good at doing set and forget, whether it's psychology or whether it's their actual trading style. Their trading routine doesn't give them the ability to afford the benefit of set and forget. Maybe because their trades, they're 1-to-1 traders, and without managing it, they'd be break even. They wouldn't be able to pull a profit by just letting it go. So whichever trader you are, I would love to help you get to where you'd like to go, to where I would like to go, where I feel like I am going. It's been a wonderful time getting here. I've enjoyed learning all sorts of new stuff. And then I enjoyed learning that I had to forget all sorts of new stuff and find out how I wanted to trade and how to make it work for me. And so that's really all I'm doing. I show you what works for me and try to give any advice on what could possibly work for you. And so hopefully you could take and run with it. Until next time, take it easy and be blessed. Bye.